Welcome to the StockMiner.com studios. I'm your StockMiner, Brian Johnson. We are about to enter a new week of trading, and that new week is also options expiration week. That is usually accompanied by volatility. Sometimes a lot, sometimes none. But I'm always more prepared for volatility during options expirations weeks than I am during any other time in trading. And that is because it's very common to see a gap up to start one day only to see it gap down the very following day. And so if you are a swing trader, like to hold overnight, a lot of times you can go to bed thinking you're in pretty good shape and wake up the next morning in a lot of pain. So I'm usually a lot more careful about my position sizes and what I'm doing with my trading, whether it's day trading or swing trading. So keep that in mind as we push forward. As you can see, what we have and what we were left with last Friday after about 1 day of really valid trading last week was what appears to be, and I have to look at it as, a low base formation. Just moving sideways here on the 60-minute chart, and you can see us kind of staying below the 20, below the 200, and above this strong support line. Now, for those of you that caught what we were talking about last week, I had trades on above 10,700 in the last part of the week and below 10,500. We got the 10,500 hit, and we're able to run that down for at least 100, if not 200 points by the end of the week for your trading profits, which is good. I'm very happy with that move. Now, let's look to the new week and see if we can repeat that same performance, continue to make you guys some money out there in Traderland. Be watching closely this 10,300 area. We're literally 3 points away from it. Would be surprised if we didn't see some gap of some sort tomorrow. I don't know if that'll be up or down. If we do gap up, pay attention to this area right here between about the 10,360 to the 10,400 area for that gap. Let's see if this area will hold. If we get back above 10,400, we might be in for a run that takes us back to the 10,500 area. Any gap or move below 10,300, I'm looking at 10,200, but ultimately we might reach some of these lower areas down here, and that would be a very sharp move by the indices. Right now, my first target will be I think there's some very light support back here at 10,200. But beyond that, we could see a move back down into this area if the move starts downwards tomorrow. From a daily, you can see what we had been doing. There's that big move last Wednesday where we cut through support here at about the 10,450-ish area, and then the 20, and then the 200. That was big. Now, we held the 50 on the Dow, but you'll notice that we didn't really hold the 50 on a lot of the other indices. The Dow is only 30 stocks, so it is a huge monster to turn one way or the other. And that's why it's usually, in most cases, lagging behind the other indices, because it's just such a large battleship to turn around and go one direction or the other. So we'll see if we don't crack this 50-day moving average tomorrow, which is where right around the 10,260-ish level or so. So the more conservative traders are going to want to watch that 10,250 for their shorting opportunity. Take that back down into some light support down here at 10,100. And then above us here, really 10,500 for the more conservative traders. The NASDAQ on a 60 also broke this blue line. We got kind of a retest here, and then plow. We got the drop down. 2 days of gapping down here. This one met by heavy, buying? Heavy short covering? Hard to tell at this point. But you can see that we've been bleeding out the last couple days, just as the other indices have. So this 10, let's call it 1810-ish, 18, really it's about 1810 to 1813 here. Some pretty solid support for the most part, but any drop below that could be in the 1780 mark for those of you that like to play the Qs or the NASDAQ. Here on a daily, you can see what we saw last week. While some of the other indices took a hit, but it was, I don't know, it didn't break a lot of major lines. Look at what the NASDAQ did. It just literally fell apart. Those almost all week long, every day was down last week, with the exception of Friday, which just kind of stopped for a short time and put in what could be a Harami candle of some sort. I'm not going to worry about it too much down here in this area. However, we will be watching the 1800-ish area. That will be a more major place for the NDX to hold if you like to swing trade. And we break that, guys. I really don't see a whole lot until we get back down here into the 1730, 1740-ish area. You'll want to watch this area very, very closely. Not so sure the bulls aren't going to want to hold this area down here as best they can. So you want to be careful if you're going to try to short the NASDAQ. From a weekly, you can see how we fell right back below this blue line, but right back to this heavy support line. It is right around the 50-week moving average. Breaks below that 1800 mark, as I said before, guys, 1740-ish. Yep, looks like a pretty logical place to see the NASDAQ potentially drop to. SPX on a 60-minute also putting in this little low base, messing around with this 1080-ish area. Once again, last week my call was below 1100. I think I had even some of my subscribers, and I might have told my daily viewers actually below 1113 or 1110-ish area up here was your place to get short. So the more aggressive might have got short up here. We made some very nice profits off of this last week. As you can see, we got the gap down, drove through the 1100 area, coming right back into 1090, only to be met by more selling the very next morning. And now we are consolidating right around that 1080-ish area. Drop below this, I like the 1060, 1065 area, guys. We get back below about 1075, I think you've got another 10, 15 points you can pull to the short side out of this SPX trade. From a daily perspective, you can see how we are under the 50-day moving average. Dow stayed above. SPX is below not only 1 but 2 days now. So you can call it non-confirmation if you want to. I just think that the Dow is a little bit of a slower mover than the other indices. So we will be watching this very closely coming into early Monday to see if the 1087-ish area holds. Anything back up over 1090 could give you a nice play back to 1100. So your long, your short entries all laid out for you. Should give you guys some very nice trading opportunities coming into tomorrow. Be careful of large gaps. I'm not a big fan of large gaps one way or the other. Hard to play those. So if we see a big gap down for some reason tomorrow, you'll want to be watching this 1065 to 1060-ish area for your lower support lines. Hard to take trades, I know, when you see big gaps. I'd much rather see it open about flat and run down and through those areas, but we don't always get what we want. So we'll play it as we get it. From a weekly, you can see us coming back down through the 20, through the 50, right back to touch and get near this blue line. That is down here in that 60-ish area that I've been talking about. Continue to watch that area as well. See if we don't do maybe a touch and go off that blue line coming early into the week. From a VIX standpoint, we were up last